Let's see. It says 41 people are in here. Oh, we got like 9 people. All right, there we go. We're trickling in. What's up, chat? I know it is Saturday. How's everybody's Saturday doing? Wagwan, brother. Wagwan. You ever see that you ever see those clips from like the white Jamaican guy who walks up to black Jamaicans and he's like Wagwan. And he's just like hits it with like the perfect Jamaican Creole. And they're just like, yeah, tell me what wrong, brother. I help you out. Like they just immediately they'll hit him with a look at first and they'll be like, yeah, that'd be all right. They're shocked, but then they're just like, all right, we're just gonna go with this. I remember the one where he's just like, but I have a problem. Last night I was smoking the good weed, come home, make love to my wife, and then me realize me no have wife. It was the monkey from the zoo. He's like, dude, don't smoke anymore. Great name, Consequences of My Own Actions. I am indeed a product of the consequences of my own actions. We all are. I think we're getting folk. Like I think we're turning a corner here. Uh I think we're really turning a corner here because like there was still a lot of stuff out there, but I think I think by and large, you're right, KCR. Most of the community sentiment was just like, oh, it's gonna be $21 again. Amazing. Like people were set up, right? Like people prepped for that. Like people didn't like YOLO on the run to 37 and we're like, I'll hold calls until oh no, it's all gone. Right. I think a lot fewer people did that this time around. So people had cash like on the side to be like, let's go, let's go. It just seemed like I didn't see to tell you the truth, I didn't see as much doom and gloom this time around. Like we got the bond offering again, and it really seemed like the community at large was like, "This is fine. This is great." Yeah, and take advantage. I hope you guys. I imagine a lot of y'all out there did took advantage of this. It played out exactly like the other one. It was exactly like the other one. That was wild. Um, let's bring this up, right? I mean, like that was nuts. Just like the day before, being like, is it gonna do the literal same thing? Is it and like go to the same price too? Like it was they started to drop it a little bit earlier. They started to drop it in like pre-market trading. It actually didn't go lower, right? I actually want to break that down. I want to spend a little time talking about cash value calculation. We can turn off Ultimator's thing here. But yeah, let's see. Let's go to a 1 hour chart. That's probably best to see this. Yeah, right. They just dropped it down right until it was time for about VWAP time, and then mega high volume, just mega high volume into the close. Get that pull that VWAP down there. Same thing as back here, right? As soon as it was announced, let's bump back a little bit. Oh, we gotta go back. Same thing. Timing is perfect. Right? Timing is perfect right here. Yep. So I mean, good chance we get something like this again. But of course, right, this was being able to time this perfectly. I mean, you could have just done like, right, you could have just been like, oh, I'll just wait until a specific time, which was really good. Ultimator gave a really good shout out about that. He was like, just whatever price it is at 1 p.m., that's going to be the low point, which is fine. Which was also very useful because this gives us, right, so if we're doing an equation, right, we're coming out with a pricing equation. We're like, okay, what really is the floor here? What's our floor? We figured out that the input, right, so we've got 21.17, I guess it was last time or something like that. It did go a little bit lower than that the following week. It went to like 2080 something, which was higher than the fall when we went to like into the 2030s, right? It was about 50 some odd cents high. I think it was 2087 is what we went to or something. So far, I think we had an after hours low of like 21.0 something, but that's after hours too. Intraday low, I think, was 21.54 is what we got down to. So this gives us some good information. I think Richard talked about this either in today's video or yesterday's video or something like this too. But I mean, it's kind of visible as well from the way that the company reported earnings, which I actually had just brought up here. This was the first thing I want to talk about. So what this reveals and what we're going to have to work into now for understanding what that kind of lower value on the that price floor is going to have to involve an idea that the bonds themselves are still treated like liabilities. So this was shaping my thinking, right? Some of you saw that post that I put out yesterday about how the bond values now basically equate to how much cash essentially GME had minus what they spent on Bitcoin. So this makes me think like, okay, especially the way they're reported here in earnings as well. These are, right, the bonds are being treated like liabilities. So if we go to, this is sales, where is this here? Yeah. So they say they have cash here, right? So we see this, and right, it's good to look at this because they have this at their disposal. Total current assets, 7.1 million. Okay. Or total 7.5 once we include this stuff. But the bonds here are being treated as long-term debt. Okay. So these are being treated as long-term debt. And their total liabilities are coming to 2.5. Okay. So for whatever reason, and this was something we were a little like, I remember talking about this back when we did the first one and figuring out this like 2x NAV floor calculation. What seems to be the case now is that the market, you know, the people in charge who run the pricing algorithms have determined that the cash from the bonds is not going into the floor price calculation. So this is very important. They're treating this like debt, and they're treating the cash as essentially, you know, net neutral with that liability. They won't treat the cash as being GameStops or having a positive effect, a sort of floor raise on the price with respect Yeah, until either something is done with that cash to see some sort of return, or the cash is the bonds are converted, in which case the floor will go way higher, right? Which is should be something around like $30, 30 plus. So very interesting to think about. Very interesting to think about that is. It reminds me of something, I forget who said this. It was somebody a while back who didn't quite have it exactly right. But basically, once the bonds convert, once they're all converted, GameStop's floor goes way higher. Very interesting. So that also puts the lower pricing into perspective as well, because it means that a lower face value on the bonds means they convert automatically. The convert clause is automatically at a lower price. So when these auto convert, GameStop is going to have the option either to just give the cash back or to dilute, in the sense of create shares. What's very interesting is if they do go ahead and do the dilution decision, for each set of bonds that they convert into shares, that will raise our floor, just as it did last year with the at the market offerings. So that's very interesting. There are a number of different paths that could mean Ryan Cohen might be trying to take with these. We will see. We'll think about those in a little bit. I want to take a look at the chat. Let's see. What is up, random YouTube user? Good to see you, my friend. Solid emojis from Diswag. Averaging down is a good thing. What's up, Rebleep? Oh, let's see this. Sold some CCs in my 401k at 28 before earnings. Wasn't expecting the bond offering at all, so pretty much extracted the full premium. Yeah, me too. I was surprised. Right. Well, I had a nice surprise actually, right, going into earnings, because I was like, you guys remember, right? This week I was saying, like, regardless of what happens, unless we like really pump, unless we get something that makes us go up a lot from earnings, they're going to cut IV like at least 20 percentage points, and they did. So I had one whole thing of covered calls that I basically sold. I was like, these are probably going to work out. I'm just going to open these. So basically, when we didn't, I had some long options positions, not super large, planning to try to take advantage of that of our week of settlement, right? So I did go ahead and bet a bit on that just to go ahead and see if that would work. I'll bring that up. Let's see. We want to look at here. It didn't, so I pivoted and I said, all right, let's go ahead. Let's go ahead and do covered calls. So we did covered calls. And coming out of earnings, which would have been here, right? So this would have been, June 10. Those did really, really well because we did instantly drop, actually 30 percentage points, which was wild, more than I expected, but it was a lot. So we dropped like 30 percentage points. And then I was like, okay, well, we didn't really go anywhere, and I'm not sure what we're going to do now. Do we like slightly move back up? But we've got swaps kind of coming up in July and whatnot, and they're clearly not going to run this thing into OPEX. So let me go a little bit farther out, and let me just open up a new round of covered calls. So I did like July stuff and October stuff and all that. And I was like, all right, let's just get some of these. Not like entirely, and then they did the bond offering, and then those also, so I had the first round just instantly go to nothing, and then the next round also instantly went to nothing. So I mean, some consolation for seeing it didn't necessarily offset all of the depreciation in the shares that were covered by those calls, but just very interesting to have to see those things that I was prepared to have to wait maybe like a month on, just like instantly give gratification. So interesting to see that turnaround there. So can't go wrong. It's really difficult to go wrong with covered calls, man. It's really difficult to go wrong. And the company realizes this. This whole strategy that we've been talking about basically all year. Next week is going to be my 1 year anniversary of making content that I've been talking about all year for the past year. Super stock on X on YouTube. These dynamics are the dynamics that the company just and has been exploiting for the past couple months. They are essentially selling giant call options on their own stock. Now, like, we can create as many shares as you want. We can do up to 1 billion. So we just have those. So we'll just write. We can do these. You want to do the vol thing? We'll write call options. You will run out of shares before we do. Very interestingly. So that was very cool. That was a cool day, man. That was cool to watch. We get the let's get a little bit closer here. Oh, this is too. I'll zoom out a little bit. Where are we? Yeah, right here. This massive, this order back here was pretty crazy. This was crazy. This was crazy too. Like, to just see these candles get so small, and yet the volume is absolutely off the chain. 500,000 per minute. Candle high 2156, close 2156, low 2155. 500,000 shares. It did not move. It moved the price 1 cent. What's up, Hugh? Good to see you, man. What's up, Guido? I am very enthusiastic. Very. Nice, dude. Very cool. Congratulations on that. Congratulations, man. I'm back at 22.25. Awesome. Let's see. I was waiting for my cash to settle. Pick up some in the money October calls. Bought 50 more shares at 22, though. Nice, man. 50 shares. That doesn't hurt. Hey, man, we're all coming from somewhere, right? Everybody in the community coming from somewhere. Different strategies, right? Let us pile up different things. It's good. It all contributes at the end of the day, right? That's right. You only need one. You only need one to start the journey. Really, yeah. Try to get to 100. Try to get to 100, because then you can start doing options. Yeah. So, good question here. More or less, yes. So it does seem like the 2x net asset value floor, or cash floor, because essentially now assets are cash. I mean, I would say it seems like, and this is what, Richard put this out there earlier earlier today too. The business does seem to have some value, even though they're saying it doesn't. Something is at play here between the cash and the core business that essentially says the minimum value of the company that is allowable is about a 2x ratio of shares to cash. and that the underlying business is perhaps at least as valuable as especially maybe going into a console cycle, something like that. There's something they're not letting on, right? There's something they're not letting on about, right? Because if it were just cash and that was really all the value that there was, I don't know. So they must be doing something, right? So we had what? Let's see what our we had like what 4.9 billion divided by, and they're not counting the dilution yet. Yeah. That's basically 2x cash per share. So 4.8, 4.9, 4.8 is closer, I think. Yeah. So if you divide, let's see, let's hop back over here actually real quick to how much it says we have on hand. Let's see, we'd have to deduct. Yeah, here it is. So 4.987. So you can even say 5, right? It's slightly less. Yeah, it puts us right. And you could say like, okay, how much has the Bitcoin depreciated? What are they saying? What are they saying the average cost is? If you say we have 5, it should be slightly less than 5. Then the minimum should be about 22. If you depreciate, if you say we bought Bitcoin at the absolute top, then maybe we get down closer to 4.85, something like that. So if you divide 4.85 billion by 447 million shares, and then multiply that by 2, we get like 2170. So yeah, I don't know exactly how we're pushing it. It's in that ballpark. It's in that ballpark. Maybe there's a way, right? Stocks become undervalued depending on the circumstance. But as soon as like we didn't even we couldn't even stay down there for more than like an hour before that popped back up pretty heavily. So it does seem like that's what we're looking at. The other cash, yeah, they're not incorporating that in as what the company is worth. Yeah, I guess until they, something becomes of it, or they actually go ahead with the conversion. But that's very interesting. That's very interesting, because it begs the question. Are we going to get two things, right? Are we going to get more offerings? I guess. I imagine. I'm not sure. Do we need to do more at the market stuff in order to entice buying on the convertibles? Part of how MicroStrategy was able to just keep doing like offering after offering after offering. They did some 0.00 coupons. I think most of them are not. They also bought Bitcoin, and then that Bitcoin significantly appreciated, meaning that they could then use the appreciated Bitcoin as further, I'll put in quotes, collateral, because they're unsecured loans, meaning they're not like formally collateral, meaning you can't do anything with them. But part of that, Mark Meldrum does a really good job explaining this, where basically like why, like the MicroStrategy strategy, why that works, right? Why people keep doing this is it's like, okay, you come in, you can vol trade, you can arbitrate the bonds, you can get returns on that. But if something goes wrong and the company, goes bankrupt, something bad happens, who gets paid out? Well, whoever gets paid out is whoever didn't buy in last, right? Whoever didn't buy in last has priority at getting paid out. So the Bitcoin itself serves as like a collateral just in case stuff goes wrong, so you're not exposed. So if you're the one that's paying in, right, you're paying in this money for this next round of convertible bonds, then you actually really hope that somebody else is going to come in and then also put money on top to buy more Bitcoin, because whoever's next buys the Bitcoin that backs up your entry once they come in. Okay, that's not GameStop's thing. GameStop did actually go and buy a little bit of Bitcoin. Maybe they'll buy more. Maybe they'll do that if they need to find a way to create some additional monies, some additional something in order to entice new buyers to come in. They don't have to do that, right? So GameStop was able to entice institutions to come in and start saying like, yeah, take this money, because they already had cash collateral, in the sense that these institutions can already look and say like, oh, okay, no, if something goes wrong, you already have the money to just give to me, and I have priority because I have the bonds. Meaning something goes wrong, I can just be like, yeah, pulling the trigger, just give these back, right? Something happens. Just give the money back. That's possible. So what I wondered, this was a thought I had back in March, was what is Ryan Cohen actually trying to do with this? What is he trying to do with the bonds? I think one of the things that might key us into what he's trying to do here is, I think he is trying to use these convertible bond offerings to force all of the lending liquidity off the table. I think that might be what he's doing. I think we saw like in a while the highest GME utilization we've seen in a while. Yesterday or 2 days ago was the highest. Yeah, 2 days ago was the highest short volume of on GME in history. So it was bigger than any single day in the past in terms of short volume. We can take a look here. We can see that shares available to borrow are very low. So let's see, these are GME FTDs. Right, I think I pointed this out yesterday. I want to say yesterday that this is short interest. Not short interest, borrow fee. GameStop is, oh, look at that, my friends. Yeah, that was last night. Look at that. That's low, son. Look at this. This was the lowest value we've seen since January, right? 250,000 shares. Let me blow this up a little bit so you can see it. Move my head out of the way. That's look, we know, right? They got GMEU. We know that. I'm not going to come out and tell you that I think, oh, this is it, they're running out of shares, they're going to squeeze now. Not necessarily. I don't know how many more rounds of this we have. But shares are getting very low. Excuse me. This could be a case of essentially Ryan Cohen attempting to restore the state of the company to being very highly shorted. Restore, say, short interest to several 100% of the company. And I wonder, right? I mean, I'm not about to come out again and drop a whole bunch of MOAS tinfoil, but I think he may be attempting to generate a similar scenario to put current legacy shorts in a position that they were similarly in back in 2020 and 2021 and to say, look, either you close your positions and we're done with this, and you let us just do our thing as a company without all this nonsense underneath it, or I'm going to keep doing things to put you into another 2021 scenario again. That is something that has been at the top of my mind, fresh on my mind recently, basically since March, and I think we did get a little bit more of this. Now, what I will say is, I think last year a lot of folks were excited that what Roaring Kitty had done was recreate a 2021 thing last year. And we did have some similar stuff there. But interestingly, in terms of broader market mechanics, if we look at our broader context here, we look like we are actually heading into a situation that is more similar, potentially, to 2021 than this kind of 2022 bear market, right? A lot of folks last year were saying, or coming into this year, right? A lot of experts, analysts were saying, oh, here we go, we're dipping, like this is just like 2022, we're going into 2022 bear market. And then we've come pretty much out of it, hit some recent highs earlier this week. And we're looking actually way similar, way closer to what stuff looked like in 2021. Now, we're not going to end up looking exactly like 2021 because 2020 into 2021, because that was a very unique situation. But that year featured a very similar dip. That year also featured the entrance of a significant amount of quantitative easing and in the form of rate cuts. So you'll remember a few weeks back, we were talking about rate cuts. Actually, let me get over here. Show this and stuff. Right? So you can take a look right here. Big dip over here looks way more like this than like this. So now part of what brought us out of here and turned us into this was that the administration, the Fed, said, QE. We're going to issue stimulus checks. We're going to print a buttload of money. We are going to cut interest rates very, very low. All of this is going to occur. Currently, we do have a Fed meeting next week. The estimations on whether we get a rate cut next week, I think we're still looking at we're not going to get a rate cut next week. I'll check that for what we're looking at this week. Probably not going to get a rate cut this week, but odds that we see something in July and September, or July and then October. So October 29th this year, National Cat Day, is a rate cut day. Very interestingly. Seems like if we don't get a rate cut in June, we're almost certainly getting one July, October, and maybe December. Is probably a minimum of about 0.75, but maybe up to 1.25, something like that. So if we do, this would suggest, right, a move into equities, an inflow of cash into equities, say out of the bond market into equities. From, as I understand this relationship, right, we typically go up when we get rate cuts. Hopefully not a sign of some greater weakness underneath, but yeah. And then who is this? Peruvian Bull, I think, was talking about this today. The idea that gold has just been ripping for about 18 months straight, and that this has usually coincided with an anticipation of a new onset of QE, of quantitative easing. So money printing, rate cuts, that sort of thing. So very interesting. If that does happen, what it did look like was the case last year. It did look like GameStop pumped. talked about this a few weeks ago. Whenever we got a rate cut. So you'll remember we were trying to figure out, man, what was it about these dates? What was it about, say, September 20th? What was it about, November 7th that really caused these big volume runs here, this crazy volume? Likely had to do with rate cuts. So September 18th was a rate cut. 2 days later, we got that 62 million volume day. Then November 7th was one, and then we shot up over the next couple days here. And then December 18th, we got one, and then shot up, and then did our double top there. So something about rate cuts seems like it causes some sort of repositioning. I think it may have to do with repositioning of interest rate swaps that then causes GameStop to pump. But it does seem like, at least last year, it did seem like we had, could be a coincidence, don't know for certain, but certainly that is a theory I'm looking to investigate now going into this year and taking a look at our rate cuts. If that's the case, the rate cuts basically are scheduled such that price action going into the fall and then into the winter and the change of the year look like they should line up more or less with some of those key price action points from 2020. So whether, of course, that results, 2021 was very unique. So I'm not about to come out here and say, oh, we're going to get this thing again. But this thing, right? So we got this stuff here. Right, a little June action, came down a bit, and then in August, right, we started to move up and did this kind of worm deal. Came down into October. November, we were kind of low, and then we started to move up again. Came down basically into the same types of days around FOMC, right? Basically around the FOMC dates. So this is what makes me think, all right, there's got to be some interest rate swap hedges or something like that that's concentrated around these dates. And then we did this stuff. So do we necessarily get that again? This whole rigmarole over here. I don't know. I'm inclined to say no because that was very unique. But do we see a little bit of extra squiggly squawk going up this way as a result of some of that interest rate stuff? Potentially, yes. It is certainly on the horizon. Yes. Let's take a look at the chat. Yeah, that's a good question. The liability, I guess, is that they need to be, I guess it's not they need to be paid out. But technically, like, the money isn't the company's until the bonds are converted. So like they could just come out and they can't convert them yet. It's weird. They either have to deliver on shares or they have to deliver just the cash back at some point in the future. But I suppose that's the thing. It's like, okay, let's say we trade at $40 for 20 days. And then the shares are issued. And then that means either shares have to be issued or the money has to be given back, in which case the price of the stock would go down because then the money would just have to be given back. I guess something like that. It's weird because they're not loans, but kind of. No. Yeah, we'll see. Could be a good chance to flip there. Good question, Sharon. Good question. Will next earnings be a rug pull? We'll have to see. Right, there was even some doubt going into this one. Especially now it's concerned because we've got the cash basically matched up to, well, we'll probably have to look at price. You know, if we're up in the 30s and we really haven't made too many moves with respect to the underlying yet, then maybe, yeah, right? If we're, 28 or 29, even like we were this time around, maybe doing at the market, something like that. Maybe. I mean, if you have the chance. We're just going to chop around this week, wondering for call holders if we should cut losses or wait until June 17th. If you're holding long calls, I mean, it depends on the trade, I guess. I would not expect us to go beyond about $24 prior to June OPEX. More or less, that's my outlook. So if you recall what happened in the last offering, move in here. Yeah, we did this for a few days. And insiders had a chance to buy too, right? So bond offering was complete here on the 1st. And then, let's see, Ryan Cohen, I think, bought in. I think he bought in on the 3rd. Yeah, because he bought in like the 21s. I think this day. He bought in on the 3rd. And then as soon as, that was the thing, he also made sure to disclose, he filed his 13F, I think it is. No. 13D. 13F is for institutions. He filed his 13D. And by filing his 13D, it meant that his trade couldn't be internalized. It had to be delivered immediately. And so as soon as he filed his 13D, the price shot up after hours, which was really fun. And then we were off to the races. So what would that be equivalently? 17th here is when they're going to file the indenture. So we should expect to see that after hours on the 17th. 18th. Interesting. 18th is ideally, right, that's when he would have been the same time that he would have bought last quarter. So June 18th would be the equivalent there. But if he goes ahead and files a 13D after hours, that's going to create some problems because June 19th is Emancipation Day in the U.S., so that is going to be a bank holiday. It's a federal holiday as of a couple years ago. And that means that if he makes a decent enough purchase, then they'll have to invest something to try to get June OPEX under control, which means that they basically guarantee that there's got to be some kind of OPEX tailwind going into early August, something like that. Yeah, very interesting. Interesting. Why do you think they want 60% of GME? How'd you arrive at that? That's a cool idea. I'd love to hear more if you want to develop that for us a little bit. Interesting that after earnings, IB dropped to below 52-week low for a few hours, and then it slowly crept up to 80%, even if price is going down. So it's no. The same thing. Yeah, IB structure is not broken. It's just this happened last year too. Or I keep saying last year because like Q4 is end of 2024. This happened last quarter too. So because I think this was tied to volume. So because volume got so high because of the bond offering, even though we went down, IV went up. In the entirety of the past year, there are only two moments when that's ever happened, and both of them were the bond offerings. Same thing happened this year. It got shorted, but then it wasn't until we had that wild volume spike, right? So, in fact, we can get a little closer in here. So, excuse me. So this is, I want to say, like, we spiked a little bit. IV started to go up a little bit here, but it was in this range that it really, really went up in here. And this is because volume went up quite significantly. Like, volume was really high, maybe even after like this point. IV went up very significantly as we went down here, largely because we had run the gamut, right? We had gone down as far as we were going to go down, and then I think it was just a question of like, oh, all right, like, it's gonna go up now. Charge a bunch of money on options. There was a ton of volume, and because we can get little moves just like we saw, we could get moves like this where all of a sudden, whoop, and somebody just decided to, I don't know, close out 3 million shares, and we run, whatever this was. I think this was 6 million volume in 4 minutes, and we shot up a whole dollar. Right. So yeah, that's kind of volatile. And now it's trending back. It's trending back down again, and it will a little bit. I don't think it's going to go all the way back down to like 73% where it was, but we'll see that. No, that doesn't break the IV structure in the sense that typically, as GME's price goes up, its IV goes up with it. Just in these instances, this same thing happened between these two different bond offerings. Same thing happened. Hey, what's up, Maxie? Yeah, this is kind of, I think this is probably a scam. I don't know. This seems like they were pushing it, right? Like, they dropped news articles about it when this was happening. I don't know. I think I don't know, man. I don't trust ETFs at all. Cheers. Thanks, Guido. Yeah, it's next week. Next week will be my 1-year anniversary. Oh, what's up, Dingus? Dingus Pingus. Northern Victoria Island in Nunavut. That's up there, man. Dude, it's some asbestos abatement. Wow. Nice, man. Way to go, dude. Congratulations. Isn't the modern world wild? Isn't it wild that like this is even possible? Like, you can just be in Nunavut. They're like, all right, let me just get in this trade real quick. Oh, we're going down? Okay. Let's see. How do we track with the potential bond conversions and a 1 billion cap on outstanding shares? I think we just kind of need to have multiple calculations going at the same time. So, like, put in a theoretical price if, like, assuming the bonds don't convert, have a theoretical price. Assuming one group of bonds converts but not the other one. Assuming both bonds convert, and then do the adjustments there. And then, or is this like, do you mean like how many more like additional ones they might do? I don't know. I'm not sure. They could do, I think this should come to like, the first one was 50 million shares. We'll get the final indenture, I think. Wait, no, we should be able to do this, right? We can just do this real quick. So it's going to be 2.68 billion. And what was the pricing? 28.91? Comes to almost 93 million. So I think it's that plus, I think it was 50 point something, but we'll just say 50 million. 142 million. Yeah. So previously our outstanding is 447 million. Yeah, so we've still got another, 410 million possible shares to issue. So they can keep going if they want to. Yeah, great question. That's a big question there as to whether they plan on doing any more of that. Maybe they do more at the market offerings just to get cash first to collateralize another round of these. I don't know. What else could they do? I mean, supposedly they're capped at issuing 1 billion shares, but they could just vote to do more. So I don't know. Yeah, it'd be cool if that was a target and not a limit. That'd be great. They just keep doing it. We could do this for a year. Wouldn't that'd be cool to do for a year? Set up for that, right? But it's fun because you keep a little bit of uncertainty there, so you have to bet on it, right? If the company told you they were going to do it, then it'd be a problem, right? It'd be a problem because then Wall Street would be like, all right, okay, and then they would screw with it, like they know that we could, too many people would catch on, and then they'd screw with it. Like issue their own ETF. Isn't MSTY the same as GMEU? MSTY isn't it a 2x leverage micro strategy ETF? Oh no, it's also option income. Yield max MSTR option income strategy. To tell you the truth, I haven't read the prospectuses on these. I have to do that. Maybe I'll read that tomorrow or something. Exactly how they do this. Why do these run up and down like this? I don't know. I'll look into that actually. I mean, I don't think they can make their own ETFs, but this new IGME, I think it is the same thing as MSTY, but for GameStop. So somebody already had the idea to put that thing out there. Let's see. What's the official market cap right now? What are we? What's our price? Like 22.30. So market cap right now is 9.96. So 9.97 billion. So yeah, it'll have pretty close to. It's going to have like 90%. 90% of its value will be cash. Look, it's not going to stay that way, man. This is what I'm saying. Like, yeah, it's not going to stay that way, man. It's gonna go up. We gotta wait, but it's gonna go up. That'll be very interesting to see play out. Yeah, PSA, man. We got Michael Pachter to actually say something good about GameStop because of the collectibles stuff. So if he's willing to admit that, but he still hasn't moved his price target for GameStop up from 13.50. Oh, I closed them already. Yeah, no. No, I closed them once they became essentially worthless. Yeah. Yeah. No. At this point, right? At this point, like, because we've come down the ladder in terms of price range. Now it's like walking in a bit. So go weeklies, couple weeks out, stagger them, do something like that until we can get back to a better range there. Then you can start doing stuff. You can start doing stuff a little farther out again. All right, ideally, I guess how would you run that, right? You'd kind of do weeklies, and then as you get to the top, then you go, oh, we're getting close to the top. All right, do something, depending on how much risk you want to take in, right? You can go, I think we're going to get an offering, so I'm going to go however many months out, and I'm going to bump down if I think we're going to change in direction. And then you can capture, right? Because part of the nice thing too, right, is then you can capture the value of the expected move down without having to exit your position. And then when you're down, you already have the cash because you already sold the calls, and then just in you go. Buy more shares, buy them at the bottom, then use those shares for collateral for another round of covered calls at the bottom. You can go shorter. That's what I did this time around, right? So going into earnings, cover calls. I just did weeklies. They were a couple weeks out. I think I sold like for July like 27th or something like that, or June 27th. Those went to like 5 cents immediately the next day. So close those. Open July and October ones. Those lost 80% of their value when we opened the next day. Close those. We got the IV spike on the bottom from the heightened volatility. Sold another round of covered calls for June OPEX. I think I did June OPEX. So just very, very short, right? Because it was just to exploit that IV move that those have already lost again. Like just from Thursday into Friday, those are also now down like more than 50% just from the IV fluctuation. But get the money at the bottom, take the money, buy the shares at 21.50, sell more covered calls for the same thing, and then make money off of that. So covered calls are overpowered. They are overpowered. They're overpowered, especially on GameStop. They are overpowered. Like, you don't need to do any other kind of options trade. Really. I try to get cute with myself sometimes. Like, maybe I'll try this. I experiment with different things. I'm just like, you know what works better? Covered calls. Yeah. Yeah, for sure. Yeah, Richard has that on his charts, by the way. It's a pretty cool magnet. That's also cool. I didn't realize that. Is that his average? That's right. That's right. 2154 was Cohen's average share price, wasn't it? Very cool. I did not realize that. That is cool to point out. I'm gonna have to go double check that, but I think you're right. Can we figure that out? Where do we see his 13D? Did they announce it? They didn't do it for the company. Let's see. Ryan Cohen, 13D, April. Yeah, what was his purchase price? That's completely correct. Mind blown. Guys, Ryan Cohen's purchase price. Are y'all seeing this? Rickson dropping the knowledge bomb on us. That's difficult to see, actually, with the resolution. Let me zoom in here. Why can't I find the tab now? Here we go. There it is. That is very interesting. Why did it not go below that price intraday, I wonder? Why? Yeah, Arcana says it right here. How about that? Yes. 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 Yes, it is. Yes. Yes. If you don't do the assumed dilution. If you do the dilution, it's like 30/80 or something. Yes, I think so. If you are gonna, yeah, didn't I? I think I did 22s this last round in the money. I did 22s into May. And what was it? May 20. May 30th. May 30, 22s. May 30, 22s. 22s are good. Yeah, they'll work like 20s worked. Like, I think the pricing dynamic on them should work like 20s worked in the, yeah, in like October. Yeah, so you should get probably decent check, right? Like, check the break even, like check what you're being charged in terms of IV and all that stuff. But I imagine those will be pretty decently priced. Seven for one naked short backed assets. MicroStrategy, I mean, kind of. See, the thing is, it's not exactly a Ponzi scheme, because Ponzi means like unless you go out and get money, right? Because I assume this is about when I was talking about MicroStrategy. It's not that with the new round of people coming in, there isn't value to be had. It's just that the risk is disproportionately shifted to whoever's most recently bought in, whoever has done the convertible bond funding. If you see Bitcoin as just, oh well, it's entirely dependent on you and the company, like just having more, like Bitcoin having more money plowed into it from you alone, then maybe yes, but Bitcoin isn't only doing that. In fact, anybody who goes out and buys Bitcoin, lots of different, right? It's not just MicroStrategy that's buying Bitcoin. They have a lot of Bitcoin, but they're not the only folks buying Bitcoin. So Bitcoin is going up for other reasons. If you go in and you buy the bonds, and you can hold the bonds, you can arbitrage the bonds. That's number one. So you can have returns on arbitrage of trading the bonds. And you can have returns from Bitcoin appreciation. The two components that are appealing in MicroStrategy to, say, someone who would buy the bonds rather than just go and buy Bitcoin yourself, because right, it's the question of, wait, why wouldn't you just go buy Bitcoin directly? Why would you buy convertible bonds in a company whose only value is in its Bitcoin? Yeah, because you want exposure to not just Bitcoin, is you want to be able to trade the volatility on the stock. And you think you can, you will risk in the short term being extra exposed in this case, in case something happens to the company. You will risk that for a short time, that you'll have to wait a while for somebody else to come in and give more money to MicroStrategy. Because you want exposure to that volatility. Because playing that volatility game is so good that you essentially, you value playing that volatility game more than just having exposure to Bitcoin itself. Because Bitcoin exposure, it goes up, it goes down, right? You don't know what's happening. But you buy the convertible bonds, the volatility is guaranteed. You short the convertible bonds to hedge them, so you have no exposure to delta, and then you just trade the volatility. Yeah. If at the right time. I mean, this is in the next couple of days, it may be one of the, I don't know. Right? I'm always hesitant to say, like, hey, this is, go out and do this. Generally I say, like, a time that I wouldn't mind entering shares is a time that I also would not mind entering, especially at this point, an in the money call, right? Because you want to think about an in the money call. You want to think about an in the money call as different than an out of the money call. An in the money call you want to think about as leveraged shares. So if you go and you look at the price of an in the money call, if it's like for January and you're saying, okay, an in the money call right now is, whatever, $5, or it's, $6 for a 22. All right, so I'm getting 3 and change X leverage on that, because you can't use margin to trade GME, so you can't have a margin. You can't like use a margin loan to trade it. So the only way you get leverage is if you go through the options market. And you say, okay, well, maybe volatility is a little high here, but I'm okay paying a little bit of a volatility premium. because the intrinsic value is basically at a minimum here, and I know that it's going to go up. I know the intrinsic value is going to go up in over that time period. So if you're optimizing for leveraging intrinsic value, you are decreasing your risk that IV falling off is gonna really hurt you. Let's see. Oh, I'm so behind on the comments. All right, I got to work backwards. This is so good. You guys have so many questions. This is so good. I love the enthusiasm today. Okay, let's start with Guido's question here. How would redemption look for the bondholders should they want to redeem early? If they wanted to redeem for shares, how would that be executed? I assume those orders would hit the lit market. No. So if they want to redeem early, then the company has to issue them directly. It can't be before a certain date. I think they can't redeem them before the first wave. They can't redeem before the end of 2027. The second wave, I think they can't redeem before 2029. I think. But no, that shouldn't go into the market. They would be issued. Yeah, they'd be issued. They should be issued the shares directly by the company. Yeah. But there would be some interesting hedging activity. I think that would happen. Question from MTD here. What's the upside for GME doing the bonds except having some money to spend and interest on it in the end in 5 years? If the price of the stock increases, they have to pay maybe 2x the price of the bonds. Let's see. The face value. Well, I mean, they're not just going to do. The upside is that they can invest the money now to do stuff to grow the company. So, yeah, they could just put it in treasuries. They're not just going to put it into treasuries. Yeah, they can execute on the business. They can invest it. Ryan Cohen is a very good investor. He's a very talented investor. Essentially, these companies are saying, like, we're just going to give you a bunch of money for you, Ryan Cohen, to go and invest for us. Go do it. And we'll risk you not giving us shares by having the opportunity to arbitrage these bonds. Something like that. It'd be a weird deal if they just stuck it into treasuries and then did nothing with it for 5 years. Then it would probably be a bad deal. Turnarounds seldom turn. Yeah. He's just going to go. I don't know. I don't know how much to make of how cryptic that may or may not be. We have to see, right? It may mean, hey, just gonna keep doing this stuff until it's time, right? think so for S&P inclusion, market cap, I think needs to be over 21 billion now. Yeah. Michael Pachter said something like that. He's like, "Oh yeah, they're gonna do like trading cards now. That's their thing." Yeah, because right. I said this earlier too. Like, I think I made a post about this today. The whole point of what the media is doing, like the whole point of Michael Packer's stuff, is they are paid. The guys that write this stuff are paid purposefully not to factor in the value of the market mechanics stuff. So we all know, we've been talking about this for a while. My entire trading strategy is based on this. Richard's trading strategy is based on this. Ultimator talks about this. Everybody who's talking about this is based on this. Obviously, Ryan Cohen is basing his strategy for the company on this. Roaring Kitty's basing his all of us, everybody's doing this. Okay? On the understanding that GameStop is undervalued based on anything any analyst is coming out about, because they do not factor in the value to financial markets for GameStop as a volatility product, as an instrument that can be used to collateralize volatility trading. And a very effective one at that, like one that's better than a lot of other stuff on the market. So they don't properly value the company because they don't, when asked point blank, why are you valuing GameStop at $30 a share? They don't want to go, well, you see, if you adopt even a simple option strategy, you go into the derivatives markets and you do this and you collateralize your shares and you sell covered calls and you do this, you can very conservatively bring in 60, 70, 80% returns on this per year. It's very highly predictable, way more methodical, way more predictable than you might otherwise think. The risk is very minimal because of the amount of cash the company has on hand. So really, that's why we're putting this into about $28 or $30, because of the cash on hand and how that can be used to estimate how high and low these volatility cycles will go. So we're going to give that a fair $30 price tag because of its volatility dimension. They do not do that. They are not interested in doing that, because they are not interested in disclosing. This is the secret knowledge. This is the secret knowledge. And not sure to what extent they calculated that risk when they decided to make the options market widely accessible for people just a few years ago. I think it's working out for them. Like, really, there are not that many people who know that this is how you do this. Even when I talk to people, like if I talk to people in my real life, like most people don't listen to me or like don't really want to, because it's like weird and you kind of have to, like, you sound like a conspiracy theorist when you talk about this stuff. Really, you sound crazy. But if you weren't already online watching all this stuff, like if you weren't following GameStop these past 4 years, if you didn't see it, I probably would have. I probably would have several years ago if I hadn't been involved in the 2020, 2021 stuff. If I wasn't involved in that and saw that whole thing play out, maybe I would be more leery. But I saw all that happen. And so I was like, oh, this is all right. Something else is going on here. Something else is going on here. So, but yeah, that's why they put out that stuff. Oh, they're going up because trading cards are good now. It's important, don't get me wrong, but yeah, that's a good question. CLEJ27, good to see you, man. Yeah, I think that's what he's doing. Look, Tesla did the same thing with Bitcoin, right? Tesla announced they were going to buy Bitcoin. They bought $1 billion. Elon bought like $1 billion of Bitcoin, and then he was like, "That's enough. We'll just see where it goes from here." So, nice, dude. Very cool. Very good. That's very funny. And Larry got a cent better than Ryan. That's so cool, man. Good question. It depends. Usually, in the last fall, I guess I was doing a fair number down by 25 because we were pretty strongly pinned below that 25 mark for a while. My trick is I'll typically go for whatever is the call wall. So call wall is what I identified to be the strike with the largest net call gamma exposure to the options market maker. So I'll go on unusual whales. You'll see this in the article that I put out on my Twitter page that I talk about in the videos every week. I have a special section dedicated to it. I will typically use that wherever the call wall is will be what I target the strike at. Very high likelihood, even beyond what the theoretical probabilities are, there is a very high likelihood that the week will close below the call wall. Regardless of where max pain is, call wall, finding the largest net dealer call gamma exposure position is a very, very high likelihood bet that strike, all the OI at that strike will expire out of the money. So for GameStop, usually you're going to see that in increments of 5. Right now, it's still technically at 30. 25 is a bigger total call gamma position, but 30 was still the net. So I like to play things conservatively. Sometimes, I'll play a little bit more aggressively with cover calls on a portion of the position, but that's where I like to go there. I do shift expiries based on kind of where we are in the price range. So I try to I try to time when we're going to shift, I try to anticipate swings in volatility that may not have to do a lot with the price itself, the price of the underlying. I try to stagger weeklies, maybe a couple out, to kind of get us, moving well towards as we move back towards the upside. If I think we're going to change direction, I'll look a bit farther out. I'll look a bit farther out so I can collect a bigger premium so I can benefit from that going farther to the downside. And then the idea there is, stack up cash until it's time to reposition on the bottom of the range there. Yeah. That's what's nice about the cover call, right? The trick, I would say this, just as like a psychological trick here. If you're trying to, because it can be hard, because you understand, you're like, okay, one day GameStop is going to go up, You're like, okay, I believe in this company. I love this company. I don't want to be parted from my shares, et cetera, et cetera. And maybe I don't have enough confidence in playing options yet to be able to be okay, with, oh, I'm okay if I go in, I go out, I don't want to miss the moon, whatever. Focus on something like, not financial advice, whatever, but, try this, You got your shares, and then focus on just doing super conservative cover call stuff. And then don't put money into more shares or into, certainly not long options, but, keep that cash on the side. Now, if you want, you can do cash secured put stuff, So you can say, let me pick a price of GameStop that I would be happy to see myself acquire shares at. So you can do that. You can do cash secured put approach, or you could just wait. You could just hold the shares, or hold your cash, and then we get another bond offering, and then wait, and then plow it in, And you just stack up that cash on the side. And so that way you say, okay, well, I didn't take profits from my shares, which, some people, a number of people I talked to, I didn't swing my position on this one in particular, just because there were a lot of question marks for me, and I was like, you know what, Don't need to get greedy. Things are going well in my camp. I can just stick to cover calls. That's gonna be fine. I was happy for that, right? Happy to see, oh, when I come down, we came down again, but I'm however much, higher. For 2154 this time around is much higher in terms of what that means for my portfolio value this time around versus last time. So that's fine. Is it optimal? Did I really commit to that? Did I secure the most profits? No. Maybe I'll do something different next time around. But right, what you can do with that is you can say, you know what, this whole cycle, I still came away with something, and I lowered my average cost. I expanded my position. I came away with some profit. I was able to consistently bank up that profit, and then I was able to expand my position. If you can do that, you'll probably feel pretty good about that particular cycle, even if you didn't flip the whole position and then, were able to increase, your shareholding by, 100% or something like that. Right. Just a way to think about it. Like I said, not financial advice, not telling anybody to go out there and specifically do this. But that's a potential way you can approach that. Particularly if you happen to be risk averse, like really risk averse, but still want to be able to benefit from these principles in such a way that doesn't involve just kind of the hodl and wait and guess kind of thing. Yeah. Yeah. Yeah, that's right. We certainly can. That's what we're doing, right? That's what we're doing. Working through this backwards here. Not sure about BOJ. Not sure about BOJ. I think so far that I've seen, if we do get an announcement that FOMC raises rates, it'll be a surprise. It'll be a surprise. It'll be a surprise. All right, let's see the comments here for a second. Oh man, the Galaxy's back. What's up, man? Great beard. Always a great beard. Well groomed, sir. Yeah, that's pretty cool, right? That's pretty cool. Like you get to, if you own GameStop, like you essentially get to have RC just be fund manager for you. In the same way that if you own Berkshire Hathaway, like you just had Munger and Buffett they just managed your money for you. That's what Berkshire Hathaway was. And that's what Roaring Kitty said for GameStop. It's a bet on Ryan Cohen. If you're invested in GameStop, you are essentially betting, you're investing your money in that guy to just manage your money, to make investments for you, right? Which is pretty cool. He's pretty good at it. He probably knows more than me. I'll tell you that. Yeah. Take a look at this. If the price of the stock increases, they don't have to pay back more. No, they don't have to pay back more. It's their election. They can either pay back shares or they can pay back cash. Their choice. Based on what they think. Yeah. Based on what would be most advantageous for the company. So if for example, if they have cash on hand and they're like, all right, we don't need this cash anymore, they can just give that back and not do shares. Or if they say, we don't have this cash on hand, it's wrapped up in investments or acquisitions or whatnot, then, yeah, we'll issue shares. They can do that. But, yes, the shares would cost them more in the sense that they had essentially sold them for, yeah, right, because like this recent one, the price per share is $28.91, but like they're getting the money now and they're not issuing the shares right now. So the shares could be issued at 7 years in the future. So getting $2.5 billion now and then giving shares out that are worth more than $28.91 in the future, it's like, it's sort of the idea behind dilution anyway. It's like having the money now to do stuff with can be way more, especially 7 years out. Because like that $2.5 billion could be $25 billion in 7 years. So, okay, you're issuing shares at a higher price than you got that $2.5 billion. Maybe that's the trade-off, right? That's the trade-off. And the idea is like at the end of the day, everybody who's involved wins. You turn that 2.5 billion into 25 billion and they turn their 28.91 into $100 share, right? Something like that. Let's go. Yeah. Really though, it's exciting, right? He said it. It's going to 25 billion. You got it, Sharon. You're welcome. Thanks for asking great questions today. Same to you, MTD. Thanks, man. Thank you for asking great questions. Thank you, everybody, for asking great questions today. This is great. This is the best. I love questions. No dumb questions. These are all great questions. Everybody asked great questions today. This is so helpful, right? Because now you guys ask these questions. Now I get to put that recording, though. Any of the folks who couldn't be here, they can stop by. They can listen. Maybe they have the same questions. And now we get to think about it together. So very good. Definitely appreciate you guys. Yeah, on that note, I think I will I will bring us to a close for this weekend. Everyone have a wonderful Sunday tomorrow. Enjoy the rest of your Saturday. Looking forward to thinking about what this next week going into June OPEX is going to look like. It's going to be interesting. Very much looking forward to seeing whether we get some new buys from Larry and Ryan. Definitely a good spot there. That 2154, 2155 was exactly Cohen and Larry's buy-in price there. So during this last round. So thank you very much, you guys. Thank you for stopping by. Great to talk to you guys as always. This was a really great week on a lot of fronts. Like, I don't think I've ever seen the GME community like so excited for a dip. That's incredible. So just, everybody out here who, whether you're new to the channel, new to trading GameStop, new to investing, or you've been around this for a while and you're celebrating making some good trades, congratulations to everybody, no matter what stage of this process you're at. Really, really glad to see so many people. And I see this too. A lot of people have been sending me messages, talking about the success they've been having. So it just really, it makes all the work that we've been doing really, really worth it. So keep it up, guys. Great work out there. Yeah, we'll see you this week. So thanks everybody.